What's going on, everybody? It's your boy C-Zar, and we are talking about XDC network today. Hit that like button, you guys. Subscribe if you want to see more content like this, and let's get into it. All right, here we are at about 7.111 cents right now on this, the 19th of April. We're coming up to the end of the month, you guys. It's coming quick. End of the month is expected to be a good thing for all of crypto, not just XDC, but everything, man. Everything's going to be good. I've got some extra stuff pulled up. I don't need all of this. We'll bring that to another screen. Yeah, okay. Anyways, I want to see the prices on these tickers. It makes me feel safe. Anyways, XDC. Looking at it on a daily time frame, your RSI is looking very constructive. Very constructive indeed. You got some nice higher lows here, higher highs coming in here, and most importantly, it looks as though you have decisively broken out of this downtrend that you were in. Now, I'm not going to connect the dots like this. In this sense, maybe you're still in the downtrend, but I think of these more as blemishes. I think if you draw a line of best fit, the line that you'll get is more closely resembled to something like this, right, where you're finding resistance here, resistance there as well, and this was kind of encapsulating your whole downtrend right here, and you've broken out of it already. Broken out, back tested it for support, right? Other than this one blemish here, I think this encapsulates it a lot better. But if you want to say that this was your downtrend, then okay, maybe you haven't broken out of it yet, but I would say already you have formed an uptrend. It looks like you're forming one. You've got a low, a high, a higher low, a higher high. That's an uptrend right there, man, and you're looking very productive. Very productive. What's nice about this, if we look at the relative price action here on XDC, yeah, you've had a recent move, you know, from the low on April 7th to the high. You saw a nice move of 36%. That's cool. But on a daily basis, your RSI is only now, like only since the 11th here, recently gotten above the 50. The next area that it's going to go to, if this is a higher low, and I think it is, even if you go lower, you still find a higher low, whatever. The next area you're going to go to, the RSI is going to promote readings, consistent readings above the 60, and potentially even in the overbought zone. Readings like that produce stronger moves. Now, if we and stronger moves would imply, you know, like we're getting away from this zone here, likely seeing a full retracement of where we were back in our highs of January 16th. January 16th, earlier this year. Where was I? Where was I? I'm sorry, I got distracted there, you guys. Let's see. Crawling up. Right, that's what I wanted to do. Okay, so overbought here, not overbought now. It's been a while since you overbought. When was the last time we saw something like this, right? Maybe here, right? It had been a while since you had been overbought. Can we say that, right? It looks like you got overbought here. It had been a while since you've been overbought. What did you do when you first got overbought, right? We could go to the last time you were overbought, but that's a different circumstance. So I want to go to, it's been a while. When was the last time you were overbought that it had been a while, right? This is your fresh overbought zone here. So maybe not the best example, but if we scope it in, it's pretty damn good, right? You get overbought and you see a really strong move, right? From the lows, you're seeing some strong moves up, but you get the real pronounced move up, the breakout move from this overall consolidation phase. That happens when you're in the overbought zone. And when you get overbought, is it time to sell? Hell no. If you sold here, you missed most of the move, so, or at least a lot of the move. Inevitably, yes, you did go lower. You formed a higher low nonetheless, but this set you up for consistent readings in the overbought zone later that led to much more phenomenal, spectacular growth. And that's what I'm anticipating is going to happen here. I don't think that you're just going to go right through the roof right now when you get into the overbought zone, but I do think that this is going to break you away from this bottom consolidation area. You'll see a more significant retracement of this overall move. We're talking about from a high to a low. Let's see. High to low, yeah, something probably just like that that's up above 10 cents, 10.8 cents, 11.6 cents, somewhere in this area at your golden ratio there. You found resistance just below this line a couple times here. You found resistance just above it and some support right there. So I really do like that 10.8 to 11.6 cent area. That's where I think you're going to go potentially by the end of April. That might be your target area by the end of April, and you're at 7 cents now, so you got some growth ahead of you. And this, again, while it will get you overbought, it will be a stronger move than what you've seen in the recent days here, especially compared to this consolidation phase. It's only going to be a setup, right? Just like this was a setup for more growth to come. And I think that more growth to come is going to happen in May. I think later May, mid-May, whatever, you're really going to start to extend out, and you'll see new highs relative to this here. That's not new all-time highs. Yeah, not new all-time highs, but on your path to new all-time highs. You might be at new all-time highs in May, but all I'm trying to say here is I think the end of this month of April is going to be phenomenal for you. You'll consolidate in the end of this month, beginning of May, whatever, somewhere in that time frame, and then mid-May or later, you'll begin to grow even more. This next move is going to get you set up for more phenomenal moves, of which take you to new all-time highs, right? Where are you going to go ultimately? Let's look at that. And just first and foremost, I don't think you're going lower. I don't think you're going lower. No, I think that was it. Not financial advice, not a financial advisor. If you go lower, the amount will be insignificant. At least in my opinion, I would think that it's insignificant. Let's see. Yeah, maybe down to 6.7 cents, 6.6 cents. You're at 7.1 cents now. Somewhat insignificant. If you were to go lower, that'd be the lowest, I'd guess. And if you don't go lower, which that's my honest expectation, is that you don't go lower from here. I think you're about to break out and continue with this move that we were just talking about over the coming days, over the coming weeks, by the end of April, right? Looking at this, talking about where you're going to go. If you look at this on a large scale XDC network right now, this whole chart is basically one giant Eve and Adam pattern. Eve and Adam. That's a very powerful double bottom pattern, right? If you're looking at that here, you can see that not only did you break out, but you've back tested your breakout point for support. Now, this is normally really good, actually. And from what I've learned, apparently back testing breakout points can hurt post breakout performance. Can is the keyword I learned. That's what I've read on a website. You know, here, let's pull it up here. There's no secrets, right? ThepatternSite.com. It's a free website. Thomas Bulkowski made it. This guy, if you don't know who Thomas Bulkowski is, he's a well-respected, world-renowned trader. He's got the most documented, statistically backed pattern trading information that we've got in the entire world, and it's all for free here. And there's stuff, of course, that you can buy of his, but anyways, just getting into this chart pattern stuff. If you look at this, and I don't know specifically. Let's see. You see, you've got Adam and Eve, but we're looking for Eve and Eve. Oh, what did I do? Hold on. Eve and Eve, or Eve and Adam, right? Eve and Adam double bottom patterns. If we look, let's see. Is there a general guide? Where's the? Let's see here. Hold on. Throwback rate 67%. That's pretty common. Two distinct valleys. Yes. Sometimes spikes. I'm just looking to see this. Or maybe not for this one. Let's see. Expect price to return near where the downtrend began, huh? Throwbacks hurt. Okay, this is what I was looking for. Throwbacks hurt post-breakout performance. That's what this guy says, and I respect him, man. I think anybody who's trading or doing technical analysis should. Sorry, I was looking for this here. But in my experience, and from what little experience I have in comparison to this guy, I mean, this guy's been doing technical analysis longer than I've been alive. I've only been doing it for 9 years now. But in my experience, it seems as though backtesting your breakout point is actually, it doesn't hurt post performance breakout. I mean, maybe it does in the sense that you don't continue with the move immediately, right? It puts it on pause. But if anything, it's good structure. You're building support at a prior area of resistance. I don't know. I think it's a good thing. But whether you take it on my look or you want to go with Bulkowski's look here, tomato. It's not that it's going to disable your post performance breakout. He's just saying that it'll weaken it. Now, what does he mean by weaken it? Well, that would imply that you're not going to hit your measure move. Your measure move here would be technically all the way up at 42.8 cents. So basically 43 cents. That's your measure move. You're at 7 cents now. By hurting your post breakout performance, that would imply that you're not going to see this move. You're going to see something lesser by the time this move's done. And I could see that happening. I mean, it's possible. But if we look at this overall, not financial advice, not a financial advisor, I would expect that this next move will be stronger than the last move was. I mean, from a low to a high there, I guess even there, yeah, you could miss your measure move of this Eve and Adam pattern. But here's the other thing, okay? When it comes to Adam and Eve's, Eve and Eve's, Adam and Adam, Eve and Adam patterns, the ones that have the Adam at the end of it always are better performing. Always are. So you've got this one notion where Thomas Bulkowski here is saying throwbacks hurt post breakout performance. This is a throwback, so technically it might hurt the post breakout performance, but it's not that it says hurt post breakout performance as like a blanket statement or as like a as if it's like some kind of statement, some kind of fact, but it's not a fact. I don't think it's a fact. I think that it's more of like a generality. And also, speaking of generalities, generally, in general, Eve and Adam patterns perform better. So I am expecting, I'm expecting that I'll start talking better. Damn, man, I can't form a proper sentence today. But what I'm trying to say here is I think that we're actually going to see a stronger move than what we saw leading into this pattern, right? Contrary to what Thomas Volkowski would say there. The measure move of this overall pattern would take you up to about 43 cents. The measure move of your bull flag that you're in would take you up to about 37 cents. And it's common with these measure moves, they're just ideas. It's common to fall short of them or exceed them. So let's prepare for that. Let's talk about that. What would that do? And actually, let's leave those up here. Right? And I don't know if this is a bull flag or not, but I think it is. If you just take that February 3rd scam wick out of the way, it would be a very clear and clean bull flag in my opinion. So I'm going to call it a bull flag. High to low here, 1886 to 200 area. Yeah, I could see that happening. XDC, you could stop there. Absolutely, you could. Could you go higher? Sure, absolutely, you could. If we take this from an overall high to low here, what would that be? And I'm not taking the February 3rd scam wick. We're doing this. 1886 is up in that area. So I really do think these measure moves coming in close together, that says something, and it might limit the performance potential of this thing as far as anything beyond 40 cents goes. But I do like that 34.4 cent to 41 cent area right there. You're at 7.1 cents now, so that's some decent growth, right? We're talking about a 6x potential on a minimum standard. We're talking about a 6.7x potential. It's really like a 5.9x on a minimum and then a 6.7x on the maximum, if we're looking at this area specifically. If you were to exceed 41 cents in price, you likely don't stop until you see prices above 50 cents or even above 60 cents. So that could provide from the current price a move that's over a 10x in overall growth. I said from the current price. I meant from the low in overall growth. From the current price, that could provide a move that's about a 9x. And then I suppose that measure move into that range would be a 4.9x to a 5.7x. My bad. I had it measured from the low. I meant to measure it from the current price. So still, phenomenal growth, above average growth for what we've seen this cycle compared to the average altcoin and what we're expecting for the average altcoin to do in this next move. I suppose the target area to really consider would be about 34 to 41 cents, somewhere in that area. There's a very strong likelihood that you stop there with the nod of the hat, the notion that you could see prices above 60 cents, above 50 cents, somewhere in that zone there. I don't think you get above 73. I do inevitably think you're going to see prices worth more than $1 by the end of the cycle and beyond, probably several dollars by the end of the cycle. Let's look at this here, XDC. I don't know what just happened there. XDC. $1.1 billion. I know it might sound crazy, but I genuinely believe that this coin could see a 100x from the current price, meaning that you could see a $7 price or more by the end of the cycle. I think this coin has the capability, has the aspirations to see $100 billion or more in market cap valuation, which would be approximately a 100x from here, which would take you up to about $7. Now, there's no fibs that really line up in this area, right? You've got $5 fibs here, $4 fibs. You've got $12 fibs. So you're either going to fall just shy of that 100x, that $100 billion market cap, or you're going to excel past it, right, and see something that's closer to 200 billion, is what I would guess there. But if I really had to guess by the end of the cycle where you would go, my minimum expectation, let's see, from a high to a low. My minimum expectation by the end of this cycle would probably be $1.46. Maximum expectation would be $7.74 if we're being honest. So there is a possibility to see 100x, but I do think you're going to have a hard time getting past this 2618. That is, after all, your last cycle high to your bear cycle low fib. So $7.75 to $1.46, somewhere in this area is where I think you'll go. A lot of cryptos like to stop at their 2272s, and when you stop at the 2272, you go just above it. Just above the 2272 here, you have a 3618 fib, a 4618 fib, so this $3.52 to $5 area is definitely looking nice. I would guess, if I really had to guess and feel comfortable about a prediction, out of any prediction for how high this thing will go by the end of the cycle, I would say something above 350 and likely something below $5.70. That'd be my expectation. But on a maximum note, you could see 774. And even though that's what the fibs say, I do believe that XDC could see a near $200 billion market cap. You could see a multi-$100 billion market cap by the end of the cycle. But if that were to be the case, you're going to have to see a lot higher targets by the end of June, by the end of this next move, than 34 to 41 cents. you need to be well above $1 if that's to be the case. If you're going to see something that's worth multiple hundreds of billions of dollars, or something that's well over $100 billion by the end of the cycle, we're going to need to see some phenomenal growth here by the end of June. And I'm not saying it can't happen. I'm just saying that's what you would need to see. So as of now, in case it's not clear, you're at about 7.1 cents. I'm expecting over the coming months by the end of June. I mean, really, I'm expecting by the end of this month, you're going to be moving up higher. You might see like 10 to 12 cents, probably above 11 cents there. By the end of this like month here. But then by the end of June, I'm expecting you would be somewhere around 34 to 41 cents, probably closer to that 40 cent area. And then by the end of the cycle, sometime in late Q4 or mid Q4, we're talking about $1.46 at a minimum to $5.70 at a maximum, maybe $7.75, maybe you get there, but I'm looking specifically between about $3.50 and $5.70 if I really had to guess myself. I've got nothing else to say. I really appreciate you all for being here. Thank you all so much. And again, I really do think this is a bull flag. I think if you take out that scariff Monday when the tariffs were going to come online, but they didn't, it was just a fake day of price. We gave it up as soon as we brought it down, and then it took time to build down. That's exactly what that wick is. If we took that out of consideration, this would look like a perfect little flag to your flagpole. And that measure move there, again, it coincides very well with the measure move of this overall Eve and Adam pattern that you're in right now. So very confident in that 40 cent area. We'll see how it goes. I think you're going to achieve that over the coming months. And by the end of this month, we're looking for prices that are at least above 10 cents. Okay, I got nothing else for you guys. Hit the like button, subscribe. Thank you all for being here. I'll see you on the next one. Take care. Bye.